I mean, they were quite clear. They're not going to trade off longer-term financial stability. And one can say, yes, that's the right approach. But for now, and that's one precondition. The other is then the economic policies must line up in terms of the property sector, the regulations and all of that, and then markets then have confidence restored. Whereas we're starting from a position of confidence deficit. Really, this is a question of how much do you love me? And if you are going to do it in a drip-feed fashion, as much as needed, I'm just not sure. As and when needed doesn't quite satisfy the question, does it?
No, it doesn't. No, it doesn't. What about the fact that they might be worried about, going down Europe's way or the US's way in terms of, if you say whatever it takes, then you're essentially throwing a lot of state money at the problem, which can risk a major debt issue, a major debt crisis down the road at a time when already the debt to GDP on a collective basis, not just government debt to GDP in China, including the local government debt, is I think north of 200% of GDP, right? Correct me if I'm wrong on that number.
No, you're absolutely right.
So they don't want to be worse off because we know what Europe is dealing with. We know what the US is dealing with, and they're fine with it. They're like, we're fine with debt and deficit as long as the economy is chugging along okay and as long as it's stimulative. But that's not what's China's game.
Yeah, it's not. And I think that's quite clear from what the leadership has said at different instances when they're not addressing specific problems. They're saying, look, we're going after, like, as you said, quality growth, not down an unsustainable fiscal path, certainly not risking financial instability along the way. So these are things that they will not compromise on. And I think it's helpful to decompose the problem. So it's not just about equity markets selling off. If we decompose it, the aspects that the CCP is really worried about is social stability from any adverse wealth effects and the wider population, any unintended impact on employment and the real economy. And I think they're also worried about how it may feed off itself and become a wider destabilizing capital outflow issue. These are the main things they're trying to backstop, along with it, the renminbi, not so much boosting the the equity market for its own sake.
Yeah. The problem